So our final panel, we're going to focus on infrastructure and particularly Belt and Road. Asia's infrastructure gap, very well documented in the trillions of dollars that's required across developing Asia. The Belt and Road Initiative, initially heralded by some as a welcome solution, certainly has had its challenges. It's drawn a lot of criticism over the last year or so, particularly from the US, which, as we know, is pushing its alternative Indo-Pacific strategy. Private sector very keen to engage in BRI. It will have a huge impact on trade as well. So let's get onto that. Let's introduce my guest, Julian Vella, Head of Infrastructure for Asia Pacific at KPMG. Ada Lee, Vice President, Senior Credit Officer at Moody's. Fergal Whyte, Director at Arup. And Steve Okun, Senior Advisor at McLarty Associates. Please join me in welcoming them to the stage. We have to start on the geopolitical aspects, so Steve, I'm going to start to you. There's huge pushback against Belt and Road for the Sri Lanka issues and Malaysia. Has China recalibrated its position? Is there a different view on Belt and Road now after those incidents?
Well, it's recalibrating. I don't think that it's necessarily done and having recalibrated. And certainly there's the debt diplomacy aspect of it, but then there's also the sustainability aspect of it. And China, at least in terms of how it's presenting Belt and Road, is making progress, right, in both of those areas. And I mean, if you look at President Xi's comments at the last Belt and Road Forum, about 6 months ago, he said the Belt and Road needs to be high quality. It needs to be sustainable. It needs to be resilient. It needs to be affordable. It needs to be inclusive, and it needs to be accessible. I don't think the Belt and Road is there yet, and that's the question that it's going to have to struggle with, and it's going to have to address. And let's just talk about coal, right, for a moment, right? I think it's like 40% of the Belt and Road projects when it comes to energy are coal. That is not the direction that the world is moving. It's not the direction, certainly, that Southeast Asia is moving. And until China really addresses those hard issues and walks the walk and just doesn't talk the talk, it isn't going to have fully recalibrated, and hopefully it's going to go into that direction. And the other point in terms of the geopolitical is that I think there's a little too much emphasis that Belt and Road is the solution to everything. If you look at Southeast Asia, Japan alone is putting more money into infrastructure last year, almost a third more than China did. And you're now seeing, the free and open Indo-Pacific. You're seeing, the development of the U.S. International Finance Development Corporation. You're seeing a lot more sustainable investment going in. And that's the direction that China is going to have to head if it wants to compete.
Julian, KPMG and your clients, are you getting a sense that the China position on Belt and Road, the China sort of learned its lessons or adapted following Sri Lanka and Malaysia, and that they're more receptive perhaps to higher quality, higher standards, a different approach to some of these projects?
Definitely, and I agree very much with what Steve just said, actually. I think if you just go back and look at the history of what have been labelled Belt and Road projects, some of which existed before the Belt and Road existed, by the way, but anyway, many of them have been questionable in terms of their value, to say the least, and a number of them have been undertaken in a way that has not necessarily produced the positive benefits that they should produce, and in some ways have actually produced quite negative benefits on local communities. So there's been fairly mixed, I'd say. I mean, some projects have been quite good, but a number of them have been pretty poor. If you go back to the first Belt and Road Forum, I think that was all about, come and join us, we're going to build a new world here. Certainly the second Belt and Road Forum, you saw a very different type of narrative along the lines of what you've just mentioned. High quality, sustainable. Sustainable's become a very big feature in infrastructure generally. And actually, there is a real need for private capital to participate in building the Belt and Road infrastructure. And private capital requires certain standards to be met, it requires certain behaviours to be adopted before it will even go near to the infrastructure. So, yeah, definitely, I think the SOEs are still learning a lot about how to develop the way they develop infrastructure. I certainly believe that the Chinese authorities are serious about wanting to upgrade the quality of infrastructure and bring in more international participation, including finance, but it's going to take a little bit of time.
Yeah, yeah. Ada, let's turn to you again. The upgrading the quality of the projects, which clearly has an impact on you, or you'd be looking at that. Are you seeing that in some of the Belt and Road projects that are coming through? Are they higher quality? Are they more investable?
I think as compared with 2016 and 17, where the Belt and Road really surged really up once President Xi noticed it, there are painful lessons, and we do see there is the evolution, which is based on the lesson learned. As compared with the past, which is mainly relying on debt financing, and which accounted for a huge majority of the country's GDP as well. I think before the project adoption, there is a more in-depth due diligence approach on these project assessment. And also throughout the life of the project, there are increased flexibility to address the changing environments that you are going to see in the Belt and Road countries as compared with a very controlled and static business environment in China, and assuming it's ever growing as well. We are seeing inflation-linked tariff. We are seeing a settlement in US dollar or even RMB as an alternative currency, refinancing or introduction of more like private capital mentioned, such as through the form of public-private partnerships, more risk sharing, taking into a longer term of risk in the form of political risk insurance, taking some other form of like performance risk insurance. I think this is something that would enhance the sustainability of this project. And after all, we're seeing that for the companies that are state-owned companies that we are looking at, they are requiring a higher return on projects than before as compared with the domestic project, which is normally single digit.
Mm-hmm. Fergal, Arup's heavily involved in a lot of these projects. Do you see a change in sentiment and views from China in terms of looking for higher quality, trying to bring in private capital and international consultants to work on some of them?
Yeah, I think what we've seen over certainly the last year or so is a shift. I mean, when we define quality, it's not just the quality of the concrete. It's much more than that. It's the quality of the socio-economic benefits to society. It's the environmental benefits. It's the quality of the product to the society that it's going into. So it's a much broader concept. And I think previously what we saw was a much greater focus on the construction aspect, linear construction of a railway from A to B, and not much consideration of what's going on around that. I think what we've seen recently is a more focus on the upfront stages, the business case, the feasibility, the pre-feasibility, to make sure all the fundamentals are in place before it goes out, before there's dirt on the boots, basically. There's also been a shift as well to what we leave, or what the SOEs are leaving as a product for the society. What we saw before was very much a piece of infrastructure which is handed over to a local government or a government which don't have the capacity to actually deal with this product, and then there's issues. So there has been more of a focus on the operation and maintenance stage and training and capacity building as part of the construction, that then it can be handed over in a ready, turnkey position for society to take it forward.
Steve, has the change in view of China, which everybody seems to agree is taking place, and the different approach to some of these projects, is it partly driven by the robust opposition to Belt and Road by the US, and they're pushing out the Indo-Pacific strategy as an alternative, or is it just the realization that to get Belt and Road motoring, changes need to be made?
No, I mean, I think the changes are coming because the recipient countries are saying we need to change, right? I mean, I think in 2018, Kenya has halted a project that was coal because of the environmental issues that were going to come out of this coal production that China wanted to fund into Kenya. You had I think a coal plant also was ceased in Pakistan in 2018 because there was overcapacity on coal, and they did not want to see more coal production coming in because it wasn't needed financially, and it was certainly harmful environmentally. I don't think this is a U.S.-China. I think the host governments are saying these are not sustainable. They're not And you saw that certainly from a financial perspective with Malaysia. You're seeing it in Thailand now, where there's debate over whether the Chinese are going to accept the responsibility as a general contractor, and that's why that contract hasn't been signed yet. So I don't see this as much as a U.S.-China, is that the countries of Southeast Asia and others are saying these need to be sustainable, not just financially, but environmentally and socially.
Sustainability is the core to this now, isn't it? Which wasn't necessarily as high on the agenda just a couple of years ago. Is that also driving some of these shifts, and is that higher on the agenda of you and your clients?
So sustainability is a fairly broad concept. When you talk about sustainability in terms of ESG type principles, I think it's definitely become far more mainstream in the last few years. I mean, I think, if you go back a few years, it was sort of a topic that was discussed but was never sort of considered to be core. But certainly when it comes to emerging market infrastructure, and particularly emerging market structure as developed and constructed and operated by the Chinese, it is very, very important. I mean, it's not just the environmental aspects. I think, as you said, Fergal, it's about the community benefits, the social benefits, and the economic benefits. I mean, I've seen projects undertaken in ASEAN countries, less developed ASEAN countries, where the Chinese have charged in, build a piece of infrastructure, committed the local government to significant debt obligations to Chinese policy banks, and only after the commitments have been made has the local government asked itself the question, well, who's actually benefiting from this infrastructure, right? Is it them or is it us? So I think that has become a much more central issue, and I think when you refer back to the Belt and Road Forum, the concept around sustainable infrastructure, that to me is the core issue. It's absolutely got to be done in the right way, produce the right benefits, minimize the negative impacts. And actually, when that doesn't happen, NGOs, society can prevent projects from going ahead, and have prevented projects from going ahead.
Fergal, again, sustainability much higher on the agenda than it was just a couple of years ago. Would you agree?
Well, since the IPCC report was issued in October 2018, which basically flags up, the implications of a 1.5 degree temperature rise as opposed to 2 degree, and it's fairly shocking, actually. We've seen a huge shift in the approach towards sustainable development. It talks about 45% carbon reduction from 2010 levels in 2030, and carbon neutral by 2050. So the Belt and Road, 68 countries, I think, have taken on projects. It's a huge platform and a huge opportunity for China to kind of recalibrate, I think is the word used, and just put sustainable development right in the forefront. The UN has come out with the 17 Sustainable Development Goals, 169 targets, poverty alleviation, gender equality, climate change is one of them, and so on and so forth. And it's a great opportunity to put those right at the middle and to rebrand and recalibrate what Belt and Road is actually all about. Because Belt and Road is only one component of a much, much bigger issue, and it should actually feed right into that.
Do you see that in terms of rating projects, sustainability, again, much more important now in terms of the credit rating of project good in attracting finance?
In terms of credit rating or risk assessment, at least in Moody's, we have been always blending in E, S, and G into our consideration. And in particular, I think we see drawbacks in the Belt and Road projects. On the environmental side, although I don't want to try to demonize China, but we have to also consider the fact that Chinese is the largest manufacturer in terms of wind turbines, solar panels, and also I think they are also the fastest expansion both domestically and internationally in terms of the nuclear-related products. So these are kind of the clean energy, and it also owns the largest hydropower projects globally. I think Chinese is also taking not really baby steps, they are very active in promoting the E part. And while also there are on the S and G part, I think this is something that they really need to work on. It's unlike working in China, that is a very closed system. As long as the government want to push something like in the area forum, no one can really stop them, and they can achieve that like seamlessly. While in the rest of the world, they have to consider local acceptance. They have to think about the local employment. They have to also think about a more lengthy or less efficient process as compared if they really want to roll out something in China. I think in some of the projects that we look in overseas expansion, I think LATAM more actively is that there is an ensurement of local employment. There's a particular consideration of like government subsidies in terms of the new clean energy or the like more emission control mechanism, which I think is some positive sign that China is paying more attention, not only on E part, but also on the S and G part to ensure that, to defend the financial and also the business substantiability of the project, and of course, in addition to the quality of the projects.
Julian, one of the vexing questions we've asked about infrastructure because of the need is getting private capital involved. Lots of talk, lots of discussions, but has there realistically been a lot of progress? Are we on the cusp of somehow making it infrastructure much more investable because of the focus on sustainability and the recalibration of China and its approach to some of the projects?
The vast majority of Chinese SOE Belt and Road projects have been undertaken through government-to-government arrangements, no or minimal competition with other players, Chinese policy-backed financing, lent to the host country, loading up the balance sheet of the host country, and actually producing, as I said earlier, questionable value in terms of the projects that have been undertaken. And I think, you know, what you said earlier, Steve, about the host countries, this isn't just about the Chinese, this is about the host countries as well, and the conditions that exist in those host countries that will either motivate or not a Chinese SOE to apply rigor to the way that they develop a project. But a number of the host countries are changing. I mean, you know, when you think about the ASEAN region, you've got a pretty broad sweep in terms of economic development there, from, you know, Laos, Cambodia, Myanmar, all the way through ultimately to Singapore, actually, but Malaysia, Thailand. And each of those countries have differing degrees of institutional strength or muscle that allows them to increasingly dictate the terms of the way the projects are undertaken. But I do think a number of countries are increasingly looking at their balance sheets and thinking about different ways, different models for developing infrastructure, trying to introduce more competition, not just necessarily relying upon Chinese SOEs to do it, and looking for ways to introduce private capital. They are risky markets. Private capital does not venture easily into risky markets when it comes to this type of investment, which is significantly capital intensive. But I definitely think both the factors in the countries themselves and the way that China is now looking at the Belt and Road and wanting to, if you like, restate what the Belt and Road stands for in terms of infrastructure is going to drive more opportunities for private capital. There's a lot to be done. I mean, Chinese supply chains are very Chinese when it comes to building infrastructure. There's very little international participation. So for private capital to even venture there has to be much more international participation into those projects, and a lot more rigor in the way that projects are selected and developed, including the sustainability.
Fergal, do you see more private capital coming? Because again, we've talked about this for years, and that is the holy grail of improving infrastructure and developing Asia. Are we at a stage now, Julian, where the climate seems to be right and the stars align to allow that, to encourage that?
I think it's pretty patchy, actually. You know, I think the Philippines is a very good example. They promulgated the PPP Center a few years ago. That died a death. Then there was a lot of government-to-government work that has, you know, is again patchy as well. They're going back to a certain different mode of PPP. So I still think the Belt and Road and the host countries are still figuring out the whole financial deal, I think, and how, you know, what is the optimal model. And it seems to me that it's very bespoke on a project-by-project basis. I don't think there's one size fits all, and maybe that's the right thing to do, actually, because it depends a lot on the bargaining clout that China has with the host country and so on and so forth. So I think in terms of private capital, there's a huge amount of people who come to us, they have money to invest. The problem is they're looking for the right project to invest in, and I think it goes back to the point you made about looking for the higher returns. And the SOEs are very much under pressure to invest outside of China. So we've seen a lot more of that, but I think it's the right bankable project, and it goes back to what I said before, is, you know, the focus really, the quality work that on these projects should be done right at the very concept stage, the business case stage, the feasibility study stage, before diving in and throwing a huge amount of money to something which could end up as a white elephant.
Yeah. Is Moody seeing any more interest from private investors in some of the Belt and Road projects, or is there still, I mean, it clearly is patchy, it's still not there yet?
We don't really see there are dramatic changes from the current model because it is normally led by a state-owned company, constructed by a Chinese also state-owned engineering company, and also initially funded by low-cost Chinese policy or commercial bank loans. And that is the most efficient or economic way under the current model. And if we want to drive in private capitals, first you have to enhance the return. Secondly is that for the nature that construction and engineering is dominated by Chinese state-owned company, this part is so difficult to change, except you can use local cement or steel. And then the last part is that if you enhance the return and you attract private capital, it contradicts to the point that you want to lower the local resistance that Chinese is trying to dominate or to occupy the national wealth or resources. So we do see there are initiatives trying to change or shift the financing model, but then we don't see there will be anything materially change the current dynamics in the near term, at least 3 to 5 years.
So, Steve, this goes back to the fact that, or possibly goes back to the fact that it is still seen, Belt and Road is still seen by those in the US and possibly others in the West as China's attempt to put its stamp for the world and to have greater influence. That is still a hurdle or a view that has to be overcome.
And yeah, I'll get there's 2 points to the question. I mean, first, if you're talking about private capital coming in, right, and certainly if you're looking at out of the EU, if you're looking at the pension funds or Australia, the superannuation funds or U.S. pension funds, there needs to be some element of ESG, right, due diligence and standard ments from the environmental, social governance perspective. I don't believe Belt and Road requires any environmental, social impact assessment done, even though Chinese law probably requires it for a Chinese, as is obviously the US and the EU and others require those environmental and social impact assessments. So if you can't do the due diligence, if you don't know our land rights being protected, if you don't know our stakeholders being engaged, you can't invest in those projects with private capital if you have any ESG commitment. And so China needs to get there if they want to bring in that private capital. And in terms of projecting of its power, I mean, you certainly can argue that the U.S. did that with infrastructure in the Panama Canal, and the British did that with the Suez, and so this it's not any different that what the Chinese are doing. But what you are seeing, right, is Japan saying we're investing more than China. Let's work more together. You see the U.S., Japan, and Australia coming together and doing $1 billion project, which is not a lot compared to what the Chinese are putting in, but they're putting $1 billion into the PNG, right, into Papua New Guinea. They're not putting in coal; they're putting in LNG. Right? And so that's where you're going to start seeing, right, hopefully the competition from that soft power perspective that will raise China's game and will bring, the U.S., Japan, Australia, and maybe India into this infrastructure game.
Okay. Keen to bring in the audience, so please prepare your questions, just hands in the air, and we'll bring around some mics and just name and organization, please. Before I do that, though, Julian, I want to touch on you. It was mentioned in the earlier panel, Belt and Road is not just about roads and bridges. I think there's a huge amount of digital infrastructure likely to go in, and that's has massive implications for trade and business over and above some of the other physical infrastructure that might go in. Is that businesses factoring that in? Do you have a look at that? Is that a key part of the vision?
I think all forms of infrastructure, including digital infrastructure, are key because what this is about is creating, initially through the infrastructure investment, connectivity in every sense of the word. So that's roads, bridges, tunnels, trains, energy, and digital infrastructure. And the purpose of that is actually to facilitate industrialization and economic growth and ability for greater flows of trade and investment. I mean, that's the ultimate game there. So definitely, digital infrastructure is as important, if not more important. And I think that just comes back to a general point about the impact of technology on infrastructure generally. I mean, infrastructure, particularly the construction sector, for many years almost had a bit of a technology bypass, I would say, right? I mean, it was very slow adopters. I think you'd agree with that, wouldn't you, Fergal?
Well, I'm about to ask you that now.
But, but in recent years, I mean, like every other sector, technology has had a massive impact all the way through the sort of the value chain of infrastructure in terms of the customer interface, the way the assets are being managed, construction and finance.
Yes.
So I think it's a big, and that in fact is a big opportunity for the developing countries through the BRA. China is a leader when it comes to technology, to actually use technology to really sort of advance the position and in many ways leapfrog a number of the more developed countries.
Yeah. So you grimaced a little at the term technology bypass.
Yeah, I think it's a good way of putting it, actually. I think, China being one of the world's leader in digital technology, perfectly placed to raising construction's game, I think, when it comes to digitalization of infrastructure. Construction has lagged when you compare it to retail, hospitality, and we heard banking beforehand. But it is beginning to take off. There's a lot of initiatives within the industry now to look at digital transformation. The one area is we've been looking at a few areas, some of which are directly relevant to Belt and Road bridges, real-time monitoring of bridges that kind of cheapen and make it a lot cheaper to look at operation maintenance of bridges. Instead of having people dangling off 300-story buildings, looking at facades and looking for cracks or whatever, we now have drones who use machine learning to interrogate cracks. So instantly repairs can be identified without any human intervention whatsoever, and so on and so forth. So it's a fantastic opportunity. 3D printing of bridges. We did one in Amsterdam very recently. China is the world leader when it comes to 3D printing, and we've started printing up a house in Milan recently, and so on and so forth. So the great opportunities for China to use its digital domain knowledge embedded into infrastructure as a platform of projects, as a program of projects, and then to raise infrastructure's game, on its own, I think is a great opportunity.
Okay, so questions please from the audience. Sir.
Thank you. My name's Simon Cox with The Economist magazine. I had two questions, if I may. I think most people looking back over China's economic development over the last 40 years would say that its own infrastructure efforts at home have been a big part of its success. So the question is, why is Chinese infrastructure overseas so bad if its infrastructure at home has been so successful? And then the second question is really about harmonization. One theoretical benefit of something like a Belt and Road Initiative that's led by a single entity is that you might have some sort of harmonization across countries, whether it be getting the same gauge on your railway or softer stuff like procedures, customs protocols, and so on. Has there been any evidence of China encouraging countries to harmonize those things across borders?
Okay.
Start, Julian.
I'll try both. I'm sure others will be able to add their perspectives. On the first one, it's interesting. I mean, it's an interesting observation you make because I have seen projects of similar nature undertaken by the same SOE in China and in other markets, and they've been developed in very different ways, right? And I think that has a lot to do with what I said earlier, which is the whole sort of environment within which the project is taking place and the influence that that environment has on the behavior of the project developer itself. I think one of the real challenges for BRI has been the fact that, initially China, and they probably still say this, they respect sovereignty and they will operate to local country laws and regulations. But unfortunately, in many countries, the laws and regulations are of insufficient quality to encourage truly acceptable behavior when it comes to considering the way a project is undertaken, whether it's through the sustainability issues or the rigor that's fundamentally required to bring capital into it. So I think really one of the things that the Chinese need to seriously think about doing is requiring in some way a standard of behavior of the SOEs at a higher level to the requirements in a number of the host countries. That's the first thing. In terms of this harmonization, I mean, I think there is a lot of work going on in terms of trying to harmonize legal, regulatory, other type of systems in countries where there's a lot of cross-border infrastructure, for example. So if you could take the ASEAN region, a lot of the infrastructure has to traverse a number of countries, not just one country. And there are huge complexities in trying to build and finance projects when the regulatory systems are different, the legal systems are different, and other standards are different. So the countries themselves, the ASEAN community itself, is trying to promote far greater harmonization to encourage more cross-border infrastructure. And the Chinese obviously would be a willing party to that because it simplifies the way they develop the infrastructure.
Fergal, particularly on the quality of projects, is there a difference, did you notice a difference between those in China, the success of those versus those in other countries?
I don't think you can, make a general comment like that. I think you can get good quality both inside and outside of China, and questionable quality inside and outside of China. I think a lot of the questionable quality outside of China has been fairly well documented for possibly geopolitical reasons. There was cracks on a bridge in Hanoi, for example, on a metro, and it's made a big deal of, actually. So we don't actually see that much of a difference. I think where we do see a difference is in, I think Julian's touched on this, is the approach to doing the project, and more on the product as opposed to the kind of the construction quality. I think it's a much bigger issue than just the construction quality. I think it's the product quality, what society gets out of it, as opposed to just, as I said before, a crack in a concrete. Just touching on the harmonization one, which I thought was quite an interesting question. And there's two modes, effectively. One is where the host country's got fairly well-developed standards, and they hand it to whoever the contracting entity is to develop. But we have been involved in projects. I mean, we had a bridge in the Maldives recently. Believe it or not, I couldn't get anyone to go to site in Maldives for 18 months. But we were brought in by the Maldives government because they had a Chinese contractor building a bridge, which is now just recently finished from the airport to the main island. And it was being built by a Chinese contractor, and they didn't know what they were going to get. It was being designed to Chinese standards, and we were brought in to kind of interrogate it and to make sure that it was internationally of appropriate quality and to the right standard, because again, the Maldivian government was going to be left with this asset. And that was quite a successful project for all sides eventually, because we did bring it together. There was value really added to that process. So two different modes in that respect.
Good time for just one more question, please. Agatha. Oh, okay, we'll take you, please. Okay.
Thank you. This is Kenneth from AT&T One Media. I want to talk about the U.S. IFDC, because I noticed they're having conversations with Indonesia and to talk about the infrastructure in the region. So the question is, what do you see about the direct competition between IFDC in the U.S. and BRI in China? And do you think both development plans can fit in Asia as a whole?
Steve, do you want to have a go at that?
Yeah, I mean, they can both fit in, right? I mean, the Belt and Road is, the numbers bandied about there are $1 trillion, and the U.S. IFDC is $60 billion. I mean, it is not going to compete. What the U.S. way to do this, right, is to incentivize private capital to work together in partnership, very much as the IFC does today and the World Bank does today, to bring in the type of investment that will meet higher standards. And ideally, this is going to, from a U.S. perspective, if Congress ever allocates the money, which I don't think it's done yet, we have other issues we're dealing with in Washington. Right? But if the U.S. ever allocates that money, then it hopefully is going to spur, China to have to raise its game. I mean, if you look at what's happening in the market, the Singapore banks are no longer lending, right, to new coal plants. Yet, 40% of the money coming out of China for Belt and Road is financing, coal power plants. We've got to move away from that, and we can have a long debate of whether or not how that can get done and the equities of it. But that's where the world is headed. And I think that's what the U.S. is trying to do with the IFDC. It's what the Indo-Pacific Forum is doing. It's what the FOIP is doing, and all of the other elements the U.S. is coming in with. And you see the rhetoric changing in China. You see the rebranding. But now the question is it going to be more than a rebranding exercise for BRI? And is it going to get to the substantive things that need to get done? And if you see China start to require, right, the ESIAs for those projects, right, the environmental social impact assessments for those projects, you're going to know that the IFDC, even though it's only $60 billion, has made a difference.
Can I just add to that, actually?
Please.
I think there's plenty of room for everybody.
Yes.
So
Yeah.
I think, the ADB did a report last year, I think, that estimates $1.7 trillion is needed every year between now and 2030 to fill the infrastructure gap in Asia. And no one entity can fill that on their own. So there's plenty out there for everybody. I mean, there's 400 million people without access to electricity. There's 300 million people without access to water supply. There's 1.5 billion people without access to sanitation. So a lot of the focus on Belt and Road and other projects is on high-speed rail lines, airports, dams, and so on and so forth. But there's a huge amount of other projects that will immediately bring benefits to hundreds of millions of people. So I think plenty are there for everybody, effectively.
Okay. On that note, I'm afraid we have to leave it because we're exactly to the second out of time. So congratulations, the most timely panel I've ever chaired. Please join me in thanking my guests, Julian, Vella, Ada Lee, Fergal, Whyte, and Steve Okun. Thank you.